Hello, this is Ronald with Indicator Vault, and we're going to do a video here today breaking down this strong bearish movement that we see originating here with the British pound US dollar pair. You can see right now I've got these three indicators on: the Candlestick Pattern Pro, Harmonic Pattern Pro, and the Order Block Gen. And I like to work with multiple time frames, starting, even as high as the weekly, occasionally monthly, but always with the daily, is at least analyzing that and then working my way down to lower time frames to find a trade. And of course, we can see here after this bearish harmonic pattern form, the bearish cipher, very strong down movement. All right. So when you start on the higher time frames, you don't need to really overcomplicate it. There may just be one or two indicators or one or two confirmations you need to just get the direction of the trade. And so as we move into higher time frames, I'm actually not going to use the harmonic pattern as much. I may show some examples on the lower time frame, but I wanted to have it here because this is now confirming the direction. So on the daily, we see this bearish pattern form. So as we see it form here, we are now looking for strong down movement on the daily time frame. Now, some other confirmations you can have with these patterns is obviously these two, the Candlestick Pattern and the Order Block Gen. And now as we see here, we kind of get a little bit of conflicting signals, but remember, we're giving preference to the harmonic pattern. The strength of this is going to give less false signals, the harmonic patterns, whereas sometimes the candlestick patterns, every indicator will give some false signals. That's why we use them as multiple confirmations to line up together. But I say we give preference to the harmonic pattern because they will give fewer false signals than these candlestick patterns will. But that's why they are great confirmations with something like the harmonic pattern or even the wolf wave indicator. Is once the pattern forms and you see in this example other bearish confirmations, then you can feel confident in getting in a trade. So for instance, let me hide the Order Block Gen real quick in the harmonic pattern. Remember, this is where it forms. And so, but we do see a bullish Ikaki pattern right here. So yes, that's kind of conflicting. However, right as it retraces, let me turn the Order Block Gen back on, and we see this bearish order block right here, right? So this bearish order block forms right as the harmonic pattern forms. That is an incredible, two-step confirmation there. Even though we have that bullish candlestick pattern, we see it start to move lower. But here's where the confirmation is. Here's where all of these line up together. Is on the retracement back into the bearish order block. We now have the evening star and the bearish Ikaki candlestick patterns. And then of course we see from there it just totally, the floor gets falls out and just tanks. So let me mark out the order block right here. Bearish order block right as the bearish wolf or harmonic pattern has formed. We're going to go to the 4 hour. Down one more time frame. Let me bring the replay bar back here. So what do we see? Again, this right here is the daily above this yellow line. This marks the beginning of the bearish order block, the daily. So what do we see here? Bearish order block on the lower time frames. See a break of structure here. Retracement. Where? Right back into the order block. So this alone is obviously given a great entry. I personally like to refine even more to lower time frames, and we're going to do that. And this is why you want to line up, all the confirmations you can. See, for instance, with the Candlestick Pattern Pro on here as well, I would like to see a bearish pattern form inside of a bearish order block. Since our bias is for price to move to the downside, we don't just want to base off of one indicator. However, with the daily, with all those confirmations lining up with this retracement here, remember this retracement has the two bearish candlestick patterns trading back into the bearish order block on the daily and the 4-hour right after the harmonic pattern has formed. So we have a number of confirmations already, but this is where you want to find out what works best for you and the confirmations you like to see. So let's go down to the 1 hour now. And we see kind of basically the same thing. On the 1 hour, same pattern. We've got these two bearish order blocks lining up together in relatively the same zone. Retracement into it. And while we don't see this inside down pattern form inside of the highest order block, this one is still holding some relevance as far as this overall zone. But again, we're wanting to refine more when we go to the lower time frame. So it's not quite lining up with the zones we want, but again, the confirmation is overwhelmingly bearish that we can feel comfortable with some of these trades. Now, I also want to bring up the Harmonic Pattern Pro here again. And we can see these two. We've got this bullish cipher. And yes, this actually does run up and create, a new higher high as far as this pattern. It kind of completes the pattern as far as creating a new higher high. And then we see this bullish bat, and this does not really do much. Barely wicks over the first one. Doesn't come close to taking this one out. We see two new lower lows here. But this is how you want to filter out some of these false signals and find the highest probability patterns or, order blocks or just zones, candlestick patterns to trade from. Remember, from the daily and the 4-hour, the higher time frames, which carry much more weight than the lower time frames. They're going to have more influence and more, push on price than the lower time frames will. So we're not interested in getting in buys and looking for bullish confirmations with these harmonic patterns here. Because the 4-hour and the daily have given so many confirmations for price to move down, we're not paying attention to this. We're filtering this out as false signals and that they are not lining up with our higher time frame bias. And so I wanted to point that out because it can be very confusing, when you're doing your analysis and, okay, which one should I take? Should I be looking for, buys or sells? What kind of trades should I be getting into? And that's why I said keep it simple on the higher time frames, like the daily and the 4-hour. Just use one or two confirmations to know what kind of trade you're looking to get into. Like I said, we're only looking to get into sells in this example here. because of what the daily and the 4-hour are telling us. They're telling us sells are the highest probability trade that we want to get into. So you see, retrace back into these lower time, the 1 hour order blocks. Moves down, even, and same thing, just repeats. We can trust this order block to hold, because we're bearish, and it's retracing to the other order block. Of course, we see that happen. We're not giving much preference to this inside up candle. But then here we see, this is really the ideal scenario, a bearish candlestick pattern inside of a bearish order block. Price doesn't quite retrace to it here, but that's fine. If you're already in a trade here, this is totally fine. This is actually just giving you extra confirmation for price to continue to be bearish and push down lower. But we finally see it here. Same thing, bearish candlestick patterns inside of a bearish order block. Price breaks down, just wicks back into it here, and then continues to fall. So this was just a quick video I wanted to show on just refining, using multiple time frames to get into a trade. Let's say we did get into the trade here. Let me move this. Yeah, just stop loss a few pips above there. Just, for some wiggle room. And let's go back out. Let's just do the 4-hour. Gotta take some of the clutter off here. Just to create a new lower low here. Looking at about almost 4R, 3.9. But we also, analyzed on the daily. So we can even go lower as far as, higher with the time frames. Doesn't want to act right, but about there, 4.5. And of course, we see it just totally continues going lower. Even taking out this ultimate low, looking about a 7.24. So great movement, great confirmations to get in on this retracement right here. Of course, taking partials along the way, probably at this low. You could have, certainly held towards this low with all the bearish confirmation pushing it down more. And we see it actually does not take that long relatively to get there. Very strong impulsive movements, continuing to push price lower without much consolidation. So anyway, that's just a quick example here at the British pound US dollar chart with these three indicators, and how we could have gotten into this sell entry with this retracement here. So anyway, I hope this video was helpful, and until next time, best of luck trading.